Welcome to Guts and Guns, where we break down big ideas and deliver actionable insights. All in just a few minutes. Let's dive in.
Welcome to the Deep Dive. Today, we're tackling a pretty big topic, navigating the U.S. job market in 2025.
Yeah, it's definitely complex right now.
It really feels like it. You've got economic shifts, all this new AI tech popping up, and even just how we work seems totally different.
It's a lot to track.
Yeah.
And trying to sift through all the reports and numbers, that can feel overwhelming.
Exactly. So that's our mission today. We want to cut through that noise. We've gone through a stack of economic reports, the latest labor stats, surveys on hiring, tech impact, all of it.
Right.
And the goal is to pull out the key insights for you to help you understand the challenges, but also, maybe more importantly, the opportunities.
Think of it as decoding what's really going on. We'll look at the economy overall, the job market itself, AI, remote work.
What job seekers are up against.
And what employers are thinking too. Sort of the whole picture.
Okay, let's jump right in then. The big picture.
Fine.
The economic climate. What are the forecasts looking like for 2025?
Well, the general agreement seems to be pointing towards slower economic growth.
Slower growth, okay.
Yeah, groups like the CBO, the Fed, the Conference Board, they're all landing somewhere in the, let's say, 1.6 to 2.0% GDP growth range for the year.
And what does slower growth actually mean for someone looking for a job?
It usually means businesses pump the brakes a little on hiring. Slower growth tends to equal fewer new jobs being created. They get more cautious.
Right, that makes sense. Less economic juice means maybe a tougher job search. What about inflation and interest rates? That's always in the news.
So inflation has cooled down from where it was. The CPI, which is the main measure, was at 2.4% back in March 2025.
Okay.
And because of that, the Federal Reserve is, expected to keep lowering interest rates. The aim is to make borrowing cheaper, kind of nudge the economy.
But does that help hiring right away?
Not necessarily. There's usually a lag. It takes time for those lower rates to filter through into business investment and then eventually hiring. So don't expect a sudden boom in jobs just because rates are cut.
Got it. A delay. Now, it also feels like there's just a lot of, uncertainty around what kinds of things are causing that.
Trade policy is a really big one right now. Those reciprocal tariffs announced back in April. Even with some carve-outs, they've definitely added a dose of unpredictability.
And how does that play out?
Well, things like tariffs can push up costs. They can disrupt supply chains. It makes businesses hesitant to invest.
Which ultimately impacts jobs.
Exactly. It can dampen hiring. We saw General Motors, for instance, flag a potential hit of like $4 to $5 billion to their profit forecast just because of tariffs.
Wow, that's significant. And it's not just trade causing jitters, is it? Something about tax laws, too.
That's right. A lot of the rules from the Tax Cuts and Jobs Act, the TCJA, are set to expire at the end of 2025.
Okay.
So there's uncertainty around fiscal policy, what happens with those expirations. It affects government money, spending, and that has ripple effects to the economy.
So, okay. Slower growth, inflation still kind of lingering, question marks around trade and taxes. It sounds like businesses might be feeling a bit shaky.
That's a really key point. And what's interesting is this potential disconnect we might be seeing.
A disconnect? How so?
The current job numbers, unemployment, job creation, they look relatively stable on the surface. But some of the forward-looking indicators, they're painting a less optimistic picture.
Like what?
Well, you look at something like the Brookings FT Tiger Index. It tracks financial conditions, confidence. It's showing things weakening, private sector confidence dipping.
Okay.
And similarly, the Conference Board's leading economic index that looks at consumer expectations, manufacturing orders, stock prices, it's also been declining.
So the here and now data looks okay, but the vibes about the future are less good.
Precisely. And that confidence gap matters. It suggests employers might start getting cautious preemptively. They might slow down hiring before the official stats take a big hit.
So your job search could start feeling tougher, even if the headline unemployment number hasn't jumped yet.
That's the potential scenario. Yeah, it's something to keep an eye on.
Okay, that sets the economic scene. Let's zoom in on the labor market itself. What are the vital signs telling us right now?
Well, the main unemployment rate, the headline number, has been surprisingly stable, actually. It was 4.2% in April 2025.
And it's been around there for a while.
Yeah, pretty much in a narrow band since May of last year, 2024, which is, historically still pretty low.
But is it expected to stay that low?
Both the Fed and the CBO are projecting maybe a modest rise as the year goes on. Nothing dramatic, but a slight upward trend potentially.
Okay. And we know the overall rate doesn't tell the whole story. What about different groups of people?
No, it definitely doesn't. Those persistent demographic disparities are still there.
For instance?
In April 2025, the rate for black workers was 6.3%, while for white workers, it was 3.8%. Asian workers were at 3.0%, Hispanics at 5.2%, and teenagers much higher at 12.9%.
So the experience really varies depending on who you are.
Absolutely. It's not a uniform market.
And I think you mentioned concerns about long-term unemployment, people being out of work for a long time.
Yes, that's a worrying trend. The number of people jobless for 27 weeks or more has climbed. It was about 1.7 million in April.
Wow. And what percentage of the unemployed is that?
That's nearly a quarter, 23.5% of all unemployed people. It suggests that while many find jobs, a significant chunk are really struggling to get back into work.
That's tough. Okay, what about actual job creation? Are companies still adding jobs?
They are. In April, the economy added 177,000 jobs, which was actually better than forecasts.
That sounds positive.
It is, but there's a caveat. The numbers for the previous 2 months, February and March, were revised downwards.
Okay, so maybe not quite as strong as the initial April number suggests.
Well, looking over the past year, the average monthly gain has been about 152,000 jobs.
And there's this idea of a break-even rate, right? The number needed just to keep unemployment steady.
Exactly. It's about how many jobs we need monthly to absorb new people entering the labor force and keep the unemployment rate stable. Earlier estimates were around 153,000 per month.
So 152,000 average is just below that?
Right. But there's some debate about that break-even number now. Because of higher immigration estimates recently, the population growth figures were revised up.
Meaning we might need more jobs just to stand still.
Potentially, yes. Some analyses suggest the short-run break-even rate could be closer to 230,000 jobs a month right now.
Whoa, okay. So adding 177,000 jobs in April, while good, might not actually be enough to keep pace if that higher break-even number is right.
It puts it into some perspective, doesn't it? But the main point, regardless of the exact break-even number, is the trend.
Which is?
Deceleration. Job growth has definitely slowed compared to 2023 when we were averaging like 251,000 jobs a month. The market is cooling.
Got it. Are certain industries doing better than others in terms of hiring?
Yeah, in April, we saw gains in healthcare that's been pretty consistent. Also transportation and warehousing, financial activities, and social assistance.
Any areas slowing down?
Federal government employment actually went down a bit. And many other big sectors like manufacturing, construction, retail saw a little change.
Okay. What about the supply side? Are more people looking for work?
The labor force participation rate, basically the share of working age people who are either working or actively looking, has been pretty stable. Same for the employment to population ratio.
So no big shifts there.
Not recently. We saw a recovery in participation for prime age workers, especially women and foreign-born workers, after the pandemic, but that seems to have leveled off. Labor supply is fairly steady right now.
So demand for workers seems to be easing, supply is steady. What about job openings, the JOL test data?
Right, the job openings and labor turnover survey. Job openings were around 7.2 million in March 2025. That's down quite a bit from the peak in 2022.
It's still high historically.
Yes, still well above pre-pandemic levels. The ratio of openings to unemployed workers is also down, but still around 1.1.
Meaning roughly 1.1 jobs open for every person looking.
That's the idea. A ratio above 1 usually signals a relatively tight market, though it's much less tight than it was.
And are people still quitting their jobs?
The quits rate ticked up slightly in March to 2.1%. It suggests some workers still feel confident enough to leave their jobs, presumably for better opportunities. Hires have also held steady.
Okay, so summing up the labor market picture, unemployment looks stable, but maybe creeping up, with big differences between groups and more long-term unemployment. Job growth is slowing.
Openings are down, but still decent. Quits are okay. It points to a market that's normalizing, cooling off.
Which likely means, for you listening, it feels more competitive than maybe a year or two ago.
That's a fair assessment, yeah.
All right, let's pivot to two huge forces reshaping everything: AI and remote work. Starting with artificial intelligence, seems like you can't talk about jobs without talking about AI. It's kind of a double-edged sword, isn't it?
It really is. On one side, you have the potential for automation and job displacement.
The scary side.
Well, yeah.
Yeah.
AI can automate routine tasks. Some estimates are huge. The World Economic Forum suggested 85 million global jobs could be displaced by 2025. Goldman Sachs talked about the equivalent of 300 million full-time jobs globally being impacted.
Wow. What kinds of jobs are most affected?
Think roles with lots of routine work. Customer service, data entry, admin support, even things like bank tellers, certain parts of financial analysis, manufacturing tasks.
So white-collar jobs too, not just factory work.
Definitely. Entry-level white-collar roles seem particularly vulnerable. Market research analysts, some sales roles. And surveys show, maybe 40% of employers expect AI to lead to some workforce reduction.
That sounds pretty bleak, but then there's the other side of the coin, AI creating jobs.
Absolutely. The WEF also projected AI could help create 97 million new roles globally by 2025. Some see potential for maybe 170 million this decade.
What kinds of new jobs are these?
Often roles focused on building, managing, and applying AI itself. So AI engineers, machine learning specialists, data scientists, AI trainers, prompt engineers.
Okay, so jobs directly related to the tech.
Yes, but it's also about augmenting existing jobs.
Yeah.
AI can handle the routine stuff, freeing up humans for more complex, creative, strategic work or tasks needing empathy.
So it's not just jobs disappearing, it's a massive shift in what skills are needed.
Exactly. A transformation, really. And AI is also changing how we even get jobs, right? The hiring process itself.
Oh yeah, definitely. AI is being used much more in recruitment.
How so?
Well, screening resumes is a big one. Almost half of hiring managers say they use AI for that.
Okay, so it's reading your resume first.
Often, yes. It's also used for matching candidates to openings, predicting workforce needs, automating interview scheduling, even analyzing video interviews for things like communication style, though that's more controversial.
Benefits and drawbacks there, I imagine.
For sure, it can be way more efficient, maybe even reduce some human biases if designed well. But there are big concerns about algorithmic bias creeping in and the need for humans to stay involved.
And you hear a lot about skills-based hiring now. Is AI driving that?
It's certainly accelerating it. AI is good at scanning for specific skills, keywords, and applications. So employers are focusing more on what you can actually do, the demonstrable skills, maybe a bit less on just the degree or the GPA. Most companies say they use skills-based hiring now to some degree.
So for the job seeker, that means really highlighting your specific skills is crucial.
Absolutely. You need to make them visible to the algorithms, but also, be able to back them up.
And does this mean everyone needs AI skills now, even if you're not a tech person?
Increasingly, yes. It's not just for coders anymore. A large majority, maybe 8 out of 10 hiring managers are looking for some AI-related skills.
Like what, specifically? It could be knowing how to use common AI tools in your field. Think ChatGPT for drafting emails or specific AI analytics tools. It could be understanding how to integrate AI into your workflow, or even just grasping the ethical implications of AI in your industry.
Wow, okay. So AI literacy is becoming a baseline expectation in many fields.
Seems that way.
Let's switch to the other big shift, remote and hybrid work. Where have things landed in 2025? Has it stabilized?
It looks like it, yeah. After all the disruption, things seem to have settled by early 2025.
What's the most common setup now?
Hybrid seems to be the most common for new job postings, maybe around 23%. Fully remote is still significant, perhaps 15%. But fully on-site is still the majority overall, around 61%.
So on-site is still dominant, but flexible options are a big chunk of the market.
Right. And estimates suggest about 3/4 of U.S. businesses have adopted some kind of flexible work approach. It's become pretty mainstream.
How has that changed the game for employers finding talent and for job seekers finding opportunities?
For employers, it massively expands their talent pool, right? They're not limited by geography for many roles.
But for job seekers,
it means more competition. If a great remote job is posted, you might be competing with people from all over the country or even internationally.
So potentially more options, but a bigger crowd to stand out from. Is everyone getting equal access to these remote or hybrid roles?
Not really. We see some segmentation. Senior level professionals often have more leverage and find more flexible opportunities compared to entry-level folks.
It varies by industry too, I assume.
Huge differences. Tech is obviously big on remote and hybrid, but other fields like healthcare, maybe parts of legal or manufacturing require more on-site presence.
Geography still matters too.
Yeah, you tend to see more hybrid roles concentrated in major cities where commuting was a bigger factor maybe.
Okay, so it's not a one-size-fits-all situation. If you were working remotely or in a hybrid setup, what skills become extra important?
Beyond your job specifics, You really need strong digital literacy, being comfortable with various online tools.
Communication, too.
Absolutely crucial, especially written communication and being effective in virtual meetings. Self-discipline and time management are key when you don't have a boss looking over your shoulder.
And from the company side.
They need solid tech infrastructure, good cybersecurity for remote access, and maybe even exploring things like VR or AR for collaboration down the line.
Okay, so they got the economic context, the labor market stats, the AI and remote work shifts. Let's put ourselves in the shoes of someone looking for a job right now in 2025. What's the experience like? What are the main hurdles, the gauntlet, as you called it?
Well, the first thing is probably that heightened competition we talked about.
Because of slower growth and more remote applicants.
Exactly. Slower job creation, expanded talent pools for remote jobs, and maybe even AI helping people apply to more roles means potentially higher application volumes for every opening.
So you might be sending out more applications, but hearing back less.
That's what a lot of job seekers are reporting, yeah. It can be really disheartening.
And then there's the skills gap. We touched on it, but what are the crunch points? What skills are really in demand versus what people have?
It breaks down into a few categories. You've got the technical skills.
Like AI, data.
Right. AI machine learning, data analysis, just general digital literacy, cybersecurity, cloud computing, knowing specific programming languages depending on the role. Employers consistently say these are hard to find.
But it's not just tech skills, right? The soft skills.
No, absolutely not.
Okay.
Those human skills are arguably more important than ever. Things like analytical and critical thinking, creativity, communication, especially clear virtual communication, collaboration, being adaptable.
Emotional intelligence, problem solving.
All of those. Plus, resilience and a willingness to keep learning, lifelong learning is huge now.
So the ideal candidate has both. Tech chops and people skills.
That's the sweet spot. But the challenge is proving you have that blend, especially when your first hurdle might be an AI screening tool.
Which leads to that whole challenge of navigating AI in the hiring process itself. What do job seekers need to know?
First, accept that AI is often the first reviewer. So you need to optimize for it.
Keywords, structure.
Yeah, use relevant keywords for the job description. Make sure your resume format is clean and easily parsable by applicant tracking systems or ATS.
But you can't just sound like a robot listing keywords.
Exactly. That's the balancing act. You need to maintain authenticity. Using AI tools to help polish your resume or cover letter can be fine, but avoid submitting totally generic AI-written stuff. Recruiters can often spot it, and it doesn't showcase you.
And employers are worried about fakes too.
There are growing concerns about deepfakes, AI-generated portfolios. You need to clearly demonstrate your real skills and experiences, especially those human ones.
It really underlines the need for continuous learning, doesn't it? Upskilling, reskilling.
It's non-negotiable now. Technology is changing so fast. Estimates suggest a huge chunk of the workforce will need significant reskilling in the next few years. Core skills are evolving. You have to be proactive.
Okay. Now, we know things vary geographically. Let's take California as a specific example. What's the picture there in early 2025?
California's interesting. Its overall unemployment rate back in March 2025 was 5.3%, which was noticeably higher than the national 4.2%.
So tougher there overall.
On average, yes. They saw some recent job losses, slower year-over-year growth compared to some other states. But, and this is key, it varies hugely within California.
How so?
Well, the unemployment rates in the SF Bay Area or San Diego were much lower, closer to the national average, but LA County was higher. And then you go to the Central Valley, the agricultural areas, and rates could be way up, even double digits sometimes.
Wow. So even with remote work, local economic health is still incredibly important.
Absolutely. Location still matters a lot.
Okay. Can we quickly recap those top skills employers are looking for again? Maybe grouped together?
Sure. Think. Technical skills like AML, data analysis, digital literacy, cybersecurity, cloud. Then human or soft skills. Critical thinking, creativity, communication, collaboration, adaptability, emotional intelligence, problem solving. And maybe a third category, AI-specific application skills, knowing how to use AI tools effectively, maybe prompt engineering basics, understanding AI ethics in your context.
That's super helpful. Okay, let's flip the script. What are employers thinking? What's their perspective on hiring in 2025?
It's a bit mixed, actually. If you look at hiring outlook surveys, like the one from Manpower Group, they actually show continued optimism for Q2 2025 in the U.S. The net employment outlook, or NEO, was plus 34%, which is pretty strong, above the global average.
Which sectors are most optimistic?
IT and financials real estate showed the strongest intentions, and bigger companies seemed more optimistic than smaller ones.
And why did they say they plan to hire?
Mostly company expansion and needing new kinds of expertise, often tech-related. But they do cite economic uncertainty as a reason they might pull back.
Okay, so surveys sound positive. Does that match up with, real-time hiring data from job platforms?
That's where we see that potential disconnect again. Data from platforms like LinkedIn, for example, showed hiring kind of stabilizing late last year, early this year. But then it seemed to slow down again in March 2025. U.S. hiring was down month over month and year over year, according to their data.
So conflicting signals, optimistic surveys, but maybe cautious actual hiring.
It seems that way. The uncertainty might be making employers say they want to hire, but they're acting a bit more cautiously in reality. And again, LinkedIn data also shows performance varying a lot by industry and by city.
It really highlights that uncertainty factor. Given all this, what strategies are employers using to cope and still get the talent they need?
We're seeing a few key things. Definitely accelerating that skills-based hiring approach.
Focusing on what people can do.
Right. Integrating AI more deeply, both in their operations and, as we said, in recruitment. Using more flexible staffing temps, contractors to manage uncertainty.
Investing internally, too.
Yes. Big focus on internal upskilling and reskilling programs. Cheaper to train current staff than always hire externally, especially for niche skills like AI.
Makes sense.
And finally, a continued focus on employee well-being and retention. Keeping the good people they have is critical, especially in flexible work environments.
Okay, we have covered so much ground. Let's try and synthesize this. What's the overall assessment of the 2025 U.S. job market? If you had to rate the difficulty level for a job seeker.
I'd probably call it moderately difficult.
Moderately difficult, okay.
Yeah, it's definitely a step up in challenge compared to, say, 2022 or maybe early 2023 when things were really hot.
But not a disaster.
No, not a full-blown crisis like we've seen in past recessions. It feels more like a normalization, maybe, but with some pretty significant headwinds. The slowing economy, policy questions, and this huge AI transformation happening.
And we need to keep stressing that moderately difficult isn't the same for everyone.
Absolutely not. Your specific industry, your skills, your experience level, even where you live, all those factors drastically change how difficult your search will feel.
So let's wrap up with some actionable advice. For you listening, navigating this 2025 market, what are the key things you should be doing?
Okay, first, prioritize strategic skill development. Really focus on that blend of technical, human, and maybe AI application skills relevant to your goals.
Be deliberate about learning.
Yes. Second, get savvy about navigating the AI-powered job search. Understand ATS, optimize your materials, but stay authentic. Use AI as a tool, not a crutch.
Quality over quantity.
Definitely adopt a targeted application strategy. Tailor your applications. Don't just spray and pray. Quality beats quantity here.
What about remote work?
Strategically leverage remote and hybrid opportunities.
Yeah.
Know where they are, what skills they require, and if they fit your needs.
Networking's still important.
More than ever.
Yeah.
Cultivate your network, build your personal brand online and offline. Referrals are golden.
And mindset.
Embrace adaptability and resilience. The market is changing fast. You need to be able to pivot, learn, and keep going, even when it gets tough.
That's fantastic, practical advice. So the bottom line seems to be finding a good job in 2025 takes work, it takes strategy, it takes being proactive.
It really does. But by understanding these shifts we've talked about, using the tools available wisely and staying adaptable, you absolutely can navigate this landscape successfully.
A great final thought. Thank you so much for breaking all of this down for us. And for you, our listener, maybe take a moment to think. Which of these factors, the economy, AI, skills, competition, feels most relevant to your situation right now? And what's one small, concrete step you could take this week to address it? That's all for this deep dive.
Thanks for listening. Stay curious, keep learning, and we'll see you next time.